Assalamualaikum. My name is Mohamad Zulhazim bin Badrol Hisam. My matrix number is 291525. Today, my group and I will be presenting about the International Islamic Financial Market, also known as Iifm. Before the rise of Islamic finance, the global financial market mainly operated on conventional, interest-based principles that focus purely on profit maximization. This system often involves elements such as riba, which means interest, gharar or uncertainty, and maisir, meaning speculation. While it helped drive economic growth, it also created instability and inequality, as seen in several financial crises around the world. To address these issues, Muslim economists and scholars introduced the Islamic financial system, which is based on Sharia principles. This system promotes fairness, transparency, and ethical investments by encouraging risk sharing rather than risk transfer. In line with this vision, the International Islamic Financial Market (IIFM) was established as a global non-profit organization. Its main role is to develop and standardize Sharia-compliant financial contracts and infrastructures, particularly in Islamic capital and money markets. By doing so, IIFM helps ensure that Islamic financial practices remain ethical, consistent, and competitive on a global scale. The IIFM was officially established in 2002 in Bahrain. Through the collaboration of key Islamic financial institutions, including the Islamic Development Bank and several central banks from different countries. The main purpose of IIFM is to standardize Sharia-compliant financial contracts and promote uniform practices across international Islamic financial markets. In simpler terms, it aims to make sure that Islamic financial products are recognized and accepted across different countries, despite variations in their local Sharia interpretations. Through its initiatives, IIFM plays a vital role in improving transparency, stability, and efficiency in the Islamic finance industry. It develops important documents such as master agreements and guidelines that help reduce legal uncertainty and make Islamic financial transactions smoother and safer. Overall, the IIFM contributes significantly to the growth of Islamic finance by creating a harmonized and credible system that supports global cooperation and encourage investors' confidence in Sharia-compliant financial markets.
Hello and greetings. My name is Mohamad Zakwan bin Muhammad Ruzi. My matric number is 291487. And today I will try to explain in the International Islamic Financial Market, which is the IIFM. I will be focusing on its core objective, key activities and outputs, and its impact on the Islamic finance industry. By the end, you will understand how that IIFM, which is the International Islamic Financial Market, helps in harmonize and grow global Islamic markets. So, for the first point is the core objective. The IIFM was created to solve the fragmentation across jurisdiction and to build confidence in Sharia-compliant financial transaction. Its primary objective are to harmonize all of the Sharia interpretation and market practices. They also create standardized legal documentation to reduce the transaction risk and to improve liquidity and cross-border interoperability for the Islamic capital and money markets. In short, IIFM's goal is to make the Islamic finance more consistent, predictable and accessible across countries. And now we move on to the key activities and outputs. IIFM, which is the International Islamic Financial Markets, achieves its objective through three main activities. First, it drafts the publishers' master agreements and model contracts. For example, include the collateralized murabaha, interbank wakalah, and also the treasury placement frameworks. All of this which provide a common legal language for market participants. Second of all, it issues market conventions and technical notes that guide how instruments are structured and traded, enabling operational alignment across jurisdiction. And the third one will be IIFM, International Islamic Financial Markets, produces research and market reports such as sukuk analysis and liquidity studies that inform practitioners and regulators. These outputs together lower legal and operational costs and make the cross-border transactions smoother. We move on to the impact on the Islamic finance industry. The practical impact is totally significant. Standardized documentation reduce legal uncertainty, which lowers the transaction cost and accelerate the deal flow. Harmonize the practice, make it easier to build the secondary markets and liquidity instruments, which also increasing the investor confidence. As a result, jurisdiction and institutions can scale Sharia compliant, offering more quickly, attracting broader international participation, and facilitating efficient capital allocation within the Islamic finance ecosystem itself. So that's a quick look at IIFM's, the International Islamic Financial Markets role, clear objective, concrete outputs, and measurable industry impact. So I will pass to the next presenter. So hopefully we can understand more about the IIFMs itself. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mohamad Zikri. My metric number 291764. Today we will focus on two critical challenges that are slowing its process: the lack of standardization and limited liquidity. The first challenge is fundamental one, a lack of universal standard, because Sharia law is interpreted differently from country to country. What is considered compliant in the one nation may be rejected in another. For example, a sukuk structure fully approved in Bahrain might be deemed not compliant by scholars in Pakistan. This creates a major challenge. It's incredibly difficult to get global agreement among scholars Sharia. The consequence, this inconsistency slows down cross-border transaction and investment dramatically. Investors are left with uncertainty, never fully sure if a product is truly Sharia compliant everywhere, which limited the market potential and create fragmentation. The second challenge is operational, limited liquidity. The Islamic financial market is simpler, smaller, and less liquidity than the conventional one. A major symptom of this is the underdeveloped secondary market. It means that many Islamic instruments like sukuk cannot be easily traded or converted to cash quickly. The challenge makes it hard for banks and investors to manage the short-term cash. It makes hard for banks and investors to manage their short-term cash need efficiently. It also leads to less financial innovation and slower overall growth. Imagine an Islamic bank need to raise cash quickly. It holds a sukuk, but because of secondary market is so small, it may have to sell that sukuk at a discount, losing value due to the very limited number of buyers.
Assalamualaikum warahmatullahi wabarakatuh. My name is Khaairul Akram bin Khamis and my number matrix 296232. So in this part of our presentation, I will be discuss about a solution for issue 1, which focus on how to address the lack of standardization in Islamic instrument. So our team has identified 4 key solutions to overcome this issue effectively. The first one is to develop and promote unified global standards. Different countries often have their own trade rules, which can cause confusion and even inefficiency. By establishing common global standards, we can ensure consistency in product quality, safety, and documentation across borders. This also make it easier for business to operate internationally, reducing trade barriers and boosting global cooperation. Next, we propose to encourage regulatory cooperation. Regulatory agencies from different countries should work together by sharing information, harmonizing trade regulations, and building mutual trust. This cooperation can help prevent conflicts, speed up approval process, and improve transparency. For example, international partnerships between customs authorities can simplify import and export procedures. For our third solution is to increase awareness and training. Many business, especially small and medium enterprise, are unaware of international trade regulations and standards. Organizing workshops, seminars, and online courses can help them understand and comply with these standards. With proper training, employees and policymakers can make better decisions and avoid costly mistakes. Finally, we suggest to utilize digital platforms. Digital tools such as e-certification systems, blockchain for trade verification, and online database can streamline process and improve coordination. These platforms allow real-time information sharing among international partners, reducing paperwork and delays. Moreover, digitalization supports transparency and efficiency in global trade networks. Next, we go to the second solution for the second issue. So the first solution for the second issue is to develop more tradable products. This means introducing new and diverse financial instruments or commodities that can attract more investors and traders. By expanding the range of products such as green bonds, Islamic finance instruments, or carbon credits, we can increase liquidity and create more opportunities for businesses and investors to participate in the market. Next, we must strengthen market infrastructure. A well-built market infrastructure ensures transparency, stability, smooth operation of all transactions. This includes improving trading systems, clearing and settlement mechanisms, and adopting global standards. For example, upgrading digital platforms and introducing real-time trading systems can make transactions faster and more secure while reducing the operational risk. For the third solution is to integrate fintech, which plays a crucial role in modernizing markets. Fintech brings efficiency and accessibility through innovations such as blockchain technology, digital payments, and automated trading. With fintech, both business and consumers can benefit from faster, cheaper, and more transparent financial service. Moreover, fintech integration can help small and medium enterprise (SMEs) access funding easily, promoting inclusive growth. Last but not least, we must enhance cooperation among governments, financial institutions, and also private sectors. When these stakeholders collaborate, they can share expertise, harmonize regulations, and promote fair competition. For example, regional cooperation in financial market allows the sharing of knowledge and resource, ensuring that all participants can benefit from innovation and growth. That's all from me. Thank you.
Assalamualaikum and hi, my name is Mohamad Faris. Now we have to come to the final part of the presentation, which is the conclusion. To conclude our presentation, let's take a look at the overall significance of the International Islamic Financial Market, or IIFM. The establishment of IIFM played a vital role in the strengthening and advancing the Islamic financial system globally. Before the creation of IIFM, the Islamic financial market faced many challenges, especially in terms of different Sharia interpretation and the lack of standardized financial contract. IIFM was established to address this issue by introducing uniform Sharia contract and by promoting transparency, fairness, and efficiency in Islamic financial transactions. Through this effort, IIFM helped to reduce legal uncertainties, improve risk management, and build investor confidence across borders. However, despite the progress, the Islamic finance industry still faces several ongoing challenges. One of the main challenges is the difference in Sharia interpretation among countries. For example, a financial product approved in one country might be rejected in another due to different Sharia rulings. Another challenge in the limited liquidity and the underdeveloped secondary market, which make it difficult for Islamic financial institutions to trade or convert assets quickly compared to the conventional system. To overcome this challenge, several key measures have been suggested. Firstly, there must be stronger cooperation among regulators and Sharia scholars from different countries to harmonize interpretation and establish common standards. Secondly, the adoption of digital technology and fintech innovation can extend efficiency, transparency, and stability in Islamic finance. Finally, developing more flexible and trade-able Islamic products, such as sukuk and short-term liquidity instruments, can help strengthen the competitiveness of the industry. In conclusion, with an integrated and innovation approach, IIFM has the potential to become a leading global platform in ensuring justice, transparency, and sustainability in the Islamic financial system. It not only supports economic growth but also upholds the true ethical and moral value in Islamic finance. Thank you for watching.